Welcome to my channel. Today's class is about a problem on revaluation account. Revaluation account is prepared at the time of admission, death or retirement of a partner to revalue the assets and liabilities to calculate the profit and loss resulting profit or loss. So here is a balance sheet is given of Anju and Manju who share the profits and losses in the ratio 3:2. Then on that balance sheet as on 31st December 2010 is given, and on that date, that is 31st December 2010, Sanju was admitted with a capital of 20,000 and 1/5 share in profits, and for which purpose assets and liabilities are revalued. A partner is admitted, and so the assets and liabilities have to be revalued. Here the value of machinery is reduced at 10%, depreciation furniture by 1,500, that is the value of the furniture is lessened. Stock is valued at 16,000. Create a provision of 10% on debtors and 22,000 to be created towards an outstanding repair bill. The value of the creditors found to be 24,000. Investment worth rupees 5,000 not appearing in the books should be duly recorded. We have to pass the necessary journal entries and prepare the revaluation account. Also prepare the balance sheet of the reconstituted firm after the admission of the new partner. So first of all, the first adjustment is about the value of the plant and machinery reduction 10%. Plant and machinery is an asset. The value of the asset is reduced, and the second one is depreciate furniture, that is value of the furniture is also depreciated. Both are assets. If there is a decrease in the value of assets, then the journal entry will be revaluation account debited to concerned asset account. Hence we have to, first of all, we have to draw the journal format. Write the journal heading, date, ledger folio, particulars, ledger folio, debit amount and credit amount. So as said earlier, revaluation account debited to concerned asset, that is plant and machinery and furniture. The amount is plant and machinery is, here it is given as 10% reduction in the value of plant and machinery. The value is 25,000. So 10% of 25,000, that is 25,000 into 10 by 100 is 2,500. Then furniture amount is 1,500. It's directly given in the question. So that amount we have credited, and the total amount is 4,000, that is shown in the debit side. Then the narration will be decrease in the value of assets. Then we can move on to the third adjustment, that is stock is valued at 16,000. Move on to the value of the stock, that is here it is written as 13,000. So there is increase in the value of stock. We have to write the increase or decrease in the value of the asset or liability or any item in the revaluation account. So that 16,000 minus 13,000, that is 3,000. 3,000 stock asset is increased. Stock asset is increased. So the entry will be stock account debited to revaluation account. The amount is 3,000. Narration is increase in the value of assets. Then our next adjustment is regarding the provision for debtors. Provision is a liability. So here it is written as 5% on debtors. So debtors amount is 30,000. So 30,000 into 5 by 100 gives the value of provision for debtors, or provision for doubtful debts. That is 1,500. Then there is an outstanding repair bill. Outstanding expenses, that is a liability. So that should also be included to outstanding repair bill. The amount is given the question, that is 2000. Total is 3500 shown in the debit side. The narration is increase in liability. Then our next adjustment, the value of creditors found to be 24,000. The original value of creditors is 27,000. So there is decrease in the value of creditors. There is decrease in the value of creditors. Creditor is a liability. If it is decrease in the value of liability, decrease in liability, the journal entry will be liability account debited to revaluation account. Here the liability is creditor. So creditors account debited to revaluation account. The amount of decrease is 27,000 minus 24,000. That will be 3,000 debit and credit. The narration is decrease in liability. Next adjustment. Investment worth rupees 5,000 not appearing in the books. Investment is an asset. It is not recorded in the books. An asset is not recorded. So the journal entry is asset account debited to revaluation account. Here the asset is investment account. So investment account debited to revaluation account. The amount is 5,000. Then our narration, unrecorded asset brought into account. Then just give a gap for the calculating the profit or the entry for profit or loss on revaluation. Then prepare the revaluation account. The two items will be shown on the debit side. So that will be plant and machinery, furniture, then provision for doubtful debts, outstanding repair bill, then that's all. All items are shown. Then the debit items will be shown on the credit side. That will be stock, creditors, investment. So by totaling it, we have found that the credit side is more. So credit side minus debit side will be the profit. So here a profit is made on the admission of the partner. The credit side minus debit side, the total amount will be 3,500. This 3,500 will be divided to the partners, the old partners, in the ratio given in the question, that is 3:2. So 35,000 into 3 by 5 is 2,100 and 35,000 into 2 by 5 is 1,400. Unused capital and unused capital respectively. Then move on to the journal entry, that is revaluation account debited to unused capital account to unused capital account. The entry for profit transferred to the old partner's capital account. The narration is the profit on revaluation transferred to old partner's capital account in the ratio 3:2. Then we have to show the capital account. Then debit column, there will be 3 amount column. There are 3 partners amount column. Credit side also show the 3 partners amount column. Here the capital account, the opening balance will be on the credit side. The opening capital, that is what the Anju and Manju brought, that is 50,000 and 30,000 respectively. 50,000 and 30,000 should be shown on the credit side, that capital has a credit balance. Then the amount transferred to the revaluation account, amount transferred to the respective capital account. The revaluation account, that is 2,100 and 1,400. Then there is another thing, that is Sanju brought us capital 20,000. That will be, there will be the increase in the capital that's shown in the credit side, shown as bank. Sanju is the Sanju brought the capital, so it's shown the amount column of Sanju 20,000. There is no other items, so credit side is credit side minus debit side is the closing amount, that is 52,100, 31,400 and 20,000 respectively. Then we have to prepare the balance sheet. Here the creditors amount. Creditors amount, that is 27,000. Then we have a reduction, that is the amount of the creditor is lessened by 3,000 revalue, that is so we have to reduce it and shown as 24,000. Then the cash at bank, cash in hand, that is shown on the respective amounts. Then the outstanding repair bill, it is a liability, this is shown on the liability side. Then the debtors amount, the original amount is given in the balance sheet, that is 30,000. 30,000 minus the provision, that is we have found out, that is 1,500. The lessened amount is shown in the amount column, that is 28,500. Then the stock amount, original value shown in the balance sheet, that is 13,000. Then there is an increase in the value of stock, that should be added, that is 3,000. Amount is 16,000. Then furniture depreciation amount minus the amount will be 22,500. Then plant and machinery, there is also depreciation 2,500. The amount after depreciation will be 22,500. Then the investment, that is unrecorded, 5,000. Then the capitals of balance, the capital account of the respective partners, closing balance. The total is given in the amount column. The total of the liability balance sheet, liability side and asset side is 1,29,500. That's all for today. Thank you.